Now on Bloomberg Intelligence, Munis in focus.
All right, folks, today's Focus on Munis is brought to you by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit BAMBonds.com. BAMBonds.com. The good folks down there, they take care of us. Let's talk municipals because it's Friday. We check in with Eric Kazatsky, Senior Municipal Strategist for Bloomberg Intelligence. Looks a little lonely there in the Princeton office. Eric, talk to us about year-to-date performance. How is your municipal bond world performing?
Yeah, hey, good morning. It is a little lonely here, but I'm happy to be here with you guys. Munis up 77 basis points year to date. Certainly not lighting the world on fire from a return standpoint, but we think there's a lot to talk to investors about when we go look at those tax equivalent yields still significantly pick up over corporates, over treasuries. So a lot of things that, still make us feel a lot good about the sector.
Talk about that the advantage over corporate rated bonds. Why are we seeing that right now in the market?
It really goes back to the advantage that munis hold in the marketplace of being tax exempt, right? Exempt from state taxes, exempt from federal taxes. And when we sort of reverse engineer that and look at them on a tax equivalent yield basis, you're picking up about 80 basis points over like rated corporates. I'm just using that analysis. We're using yield to worst for the muni index versus yield to worst for the AA corporate index. And it comes out to about 80 to 82 basis points of an advantage for munis. And look, like we talked about in sort of previous conversations, a AA muni is certainly a better risk asset than a AA corporate for a host of reasons, correlation or lack thereof being one of them.
So is that advantage for those of us in high tax jurisdictions like me in New Jersey? Mm-hmm. Am I getting a good deal on munis?
Yeah, I mean, we put out a piece this week looking at high tax states in particular, California, New York, New Jersey, and New Jersey actually came out ahead, right? Mm-hmm. So we took that analysis. Yeah, Paul, it's great news for you, right? Buy those New Jersey munis. So if you're an in-state high tax New Jersey resident, you're buying a long dated 30-year municipal bond, you're picking up over 100 basis points over a 30-year treasury. So really that advantage is pretty relevant right now.
I don't really know much about New Jersey. I'm from Connecticut. What is New Jersey doing with the money that they get from this bond issuance?
You know what? The state doesn't do a ton when it comes to actual general obligation bond issuances. A lot of it is appropriated debt, and it goes to transportation funds, education, things like that, that keep the lights on and keep things in good repair throughout the state.
Building top-notch schools.
Okay.
We got good schools there. So, all right, talk to us about just what's the new, I guess, where's these bonds? Are there any credit risks out there that you're seeing in the marketplace at all?
Yeah, there's a lot of cracks that are happening. We developed a sentiment model, using all these headlines that come across the terminal. And, we are pretty comfortable at this point that it will portend some spread widening and some bigger credit fissures in the state and local government space, 12 to 18 months from now, right? It's a slow moving train. But we're seeing this sort of play out on the federal level with all of these, efficiency cuts and DOGE looking for savings. We can't help but think it's going to have a knock-on effect to the local level, where there's going to be a lot of pushback from constituents looking to, their state and local governments to say, hey, where could we save to that might impact us on the savings level?
I'm looking at ETF flows right now.
Yeah.
A lot of interest in short-term munis. The iShares short-term national muni bond ETF. It's one of the top, at least for the last month of flows, one of the top inflows. Right after that, JP Morgan Ultra Short Municipal Income ETF. Yeah. Why are people focusing on the short end of the curve?
You know what? It comes down to who really is that buyer on the short end of the curve. And over the last 5 to 10 years, that buyer has really been defined by the SMA space, those separately managed accounts. And a lot of what's going on now is that a lot of these SMA platforms can come in and buy ETFs as placeholders, buy those short ETFs like that you're referring to as sort of a cash supplement to sit in the account, and then sort of sell out shares as they find cash bonds to invest in. It has been a play that has worked out, and you're seeing a lot of flows come into that space. If you're looking at just buying bonds in the front of the curve, probably one of the more expensive areas from a ratio standpoint, though.
But you get a better return than, being in a money market ETF, even when,
you get the exempt income from being in a muni ETF.
Ah, that's right. All right. A lot of discussion down in Washington about changing this rule, that rule. Taxes are also on the table here. What's the risk, if any, of the municipal bond market losing its tax exemption, or maybe having it limited?
Yeah, I mean, in our view, it's very slim. It really comes down to how many bills are actually going to make it, past Congress and the Senate and ultimately to the president's desk. But right now we're assigning a low likelihood of the exemption going away. Look, this kind of money goes to building schools, funding infrastructure. It really has a societal good. And when you come down to it, if state and local governments have to borrow at higher rates, it's going to be a tax increase for everyone who pays taxes and is a homeowner in those areas anyway. And I don't think it's really something, politically unsavvy that a lot of people want to be attached to, removing it.
All right. Eric, thank you so much for joining us. Eric Kazatsky, Senior Municipal Strategist at Bloomberg Intelligence. He's based down there in Princeton, New Jersey. It looks a little lonely down there.